What's going on, traders? Andrew O'Connell here. I YOLO'd my entire account into IWM calls today. No, I'm completely kidding. Let's talk about how this market got absolutely blown out today. And let's dive into the good, the bad, the ugly, and what I'm actually seeing under the hood. All right, before we dive in, please go ahead, click the like button on the video, and also subscribe to the channel. We're at 419 subscribers. We're one subscriber away from 420. All right, let's dive in here and let's talk about today's price action. As always, don't YOLO your entire account to anything. All right, indices. Let's take a look here at our box scores. We had the S&P 500. It finished down 1.64%. NASDAQ QQQ, huge loser, down 2.6%. Our IWM small caps were the relative winner. Do small caps lead during market crashes? Absolutely not. So that is definitely a key takeaway. Dow Jones was down 1.03%. The ARK Innovation ETF, RIP Kathy Wood, yesterday she was in my thumbnail with me, was down negative 5.41%. I'm still in my ARK Innovation leaps going out to January. Pretty much everything closed towards the lower end of its range except the small caps, which are right in the middle of their range. And the small caps also had a volatility contraction. Now this is a pretty big divergence that I'm noting here. The S&P 500 was down pretty big, but the volatility didn't do anything. The VIX barely budged. It was only up 0.28%. So I am going to call this a bullish divergence. And then our breadth, of course, was pretty poor. But you can see the best breadth was in the small caps, 32% advancers. We ended up finishing the day off with 78.4% down volume. And of course, my trend model flipped from +3 to +1. But we're going to talk about the silver lining and why in this particular instance, this flipped into the bell, but why I would actually override this flip for better or worse. We have the video evidence, so if I override and then I would look like an idiot, you can always just call me out on it. All right, here's our Fed speak. Let's take a look at our Finviz heat map. And this is super important. So crude oil continues to rise. These energy stocks remain buoyant. This is like the configuration that we really do not want to see on the heat map. Very noteworthy, Tesla was down 9.22% today. Elon Musk announced that they're going to be doing, I think it's like a hiring freeze. I think they might be laying off like 10% of their workers. Basically just like Elon Musk being Elon Musk and the whole world just like cues off of him. But anyway, yeah, the stock was down almost 10%. Now, in my opinion, as I look at that stock, it still has a price to earnings ratio of like 50. And we've been talking about this for the past couple weeks. The real risk is not in the high growth, high flying stocks. It's in these mega cap tech names still. And it's also in the consumer staples stocks. Funny enough, those have some of the most bloated valuations out of everything at this point. So yeah, Tesla being down almost 10%. Some might think that's the end of the world. But for me, I'm like, that stock is still overvalued. Like that thing could really just fall into the woodshed. You can see Google was down big as well. Apple also. Let's take a look at our sectors though. Energy was up 1.32%, still remains in our top momentum slot. You'll notice the solar energy stocks, they're in our number 2 slot and they almost closed out green. They were down just 0.57%. But take a look here, biotech for whatever reason was up 3.55%, and you can see that was on 1.04 relative volume. And then you can see only other really noteworthy thing is innovative tech ETF was actually down on 2.17 relative volume. Style factors, what do we have here? Take a look at this. The worst performing style factor was growth. You can see quality was not too far behind, down 1.55%. And look at this. So it's going to be tough for growth stocks to do well against this backdrop. Our NFP data came out. I almost forgot about that at 8:30 a.m. today. And we got a better than expected jobs print. As I mentioned yesterday, I believe on my Twitter feed, yeah, the worst thing that could happen for the stock market is a better than expected jobs market. So there's a lot of people, they have this completely twisted. They're saying the reason why the market's going to go down is because the economy's bad. But every time we get a bad economic data point, the market rallies. And every time we get a good one, the market declines. So that's a completely twisted way of looking at things when you're just, being honest and assessing the price action. Take a look here, S&P 500. Now these moves, if you're like a day-by-day punter, they feel like they're just like, oh my gosh, today the market crashed. Like, the market was down like almost 1.6%. But given the volatility of this market, that was only a 0.64 ATR move. That's not even a 1 ATR move. And that decline brought us back down to levels not seen since, drum roll, yesterday, slightly after the open. So yeah, it really just depends what your time frame is. But yeah, these moves, I got to admit, even for myself, they feel like they're so big. I'm like, oh my gosh, the market's down huge. And then when I look at the chart, it really just centers me. So yeah, noteworthy though, we did close below that monthly value area high. And take a look at this. Pretty much the entire week, we've just been in a very overbought condition. Like the entire week, we were really extended away from the weekly value area. So honestly, the fact that we just kind of moved sideways after that huge move higher, I don't really think it's the end of the world. Now for next week, we're going to have a very thin weekly value area. So that's going to be pretty interesting. We'll talk about that later. All right, let's take a look here. Our crude oil just continues to move to the upside. Crude oil is up 2.9%. It's at $120 a barrel. I would say the market's handling this rise in crude very well, but we don't want to see crude like make new highs and whatever. That could really jeopardize the entire thing. And then treasuries had the potential to implode today. When we got the NFP data that came out fresh at 8:30, these started slipping below the monthly value area, but we did find some support here, which was good. So treasuries looking okay, volatility looking benign, but we did have a big move lower in the indices. But another thing that I noticed, a lot of people are just getting like perma bearish. They're just super afraid day by day. They're flipping from bullish to bearish. Yesterday I was seeing all these things about like Lotto Friday. Today Lotto Friday was, pretty much all gone. I didn't see any of those messages. Well, let's take a look here. I'm noticing some strength under the hood. HPQ. I added a starter position in this name yesterday. As I'm looking at HPQ, this doesn't scream market crash. It opened literally on the lows and it put in a green candle. As I look at some of the other names I'm long, Celsius, this high flying growth stock, also put in a green candle. It finished out above that 200-day simple moving average. So if you're just looking at the headline indices, you are definitely missing out. So that is actually why, even though my trend model flipped to +1 into the bell, my trend model is basically focused around the S&P 500. And I actually think that we're starting to see some divergences where names that are outside of the indices are outperforming. So yeah, I want to make sure, and this might actually be something I update within my process. I always want to go by the price action of stocks. So if I'm holding stocks and they're doing well, my trend model flips, that's actually something that I really need to think about. So Celsius, what else did pretty well today? SBLK. Disclaimer, this is definitely going to appear on the Pristine Capital weekend watch list, because this name, what I really like about it is it's moving up to the highs, and you can see the price action got really tight up here, and then it looked like it was going to break out, and then we had a devastating shakeout. I'm sure a lot of the players that were in this thing that were trying to pile in up here on this consolidation, I'm sure a lot of them got shaken out on that candle. And then we just had a glorious, comeback candle on a day when the market was pretty weak. Take a look at another one. One of our members in this stock, BX. Blackstone, this one looks good also. Put in a green candle. So, I don't know. Like yesterday, I talked about in the recap video, I got long Restoration Hardware in the after hours. Restoration Hardware is above my buy point. So it is tough to get bearish when you see like there's divergences in volatility, and the stocks that you own are holding their own and they're doing pretty well. So let's take a look at my trades for today. What did I do? So all I did was trade IWM. In the morning, I got long these IWM 188 strike July 15th calls, really just for a scalp. And then in the afternoon, I actually added to that position at the same price because I saw the volatility was really coming out of the Russell. But other than that, when you see things are like, hey, I'm kind of viewing this as glass half full, but things could get dicey, you got to follow my trading plan. Like, that's not going to be a day where I'm like adding exposure or whatever. Like, I don't want to be cocky, don't want to be arrogant. The market is going to do what it's going to do. But with that said, that about does it for this market recap video. I am going to be putting out the Pristine Capital weekend watch list video, as well as the Pristine Capital weekend market analysis video for members. Feel free, go to pristinecapital.net if you're interested in joining our community. All right, everyone, have a great night, have a great weekend. I'll see you all next time.